Hey everyone, welcome back to another exclusive podcast from IronFX, where we are dedicated to bringing you the absolute best education to help you take your trading to the next level. In today's podcast, we'll be talking about why did the Federal Reserve turn dovish? For those who may not be familiar with the Federal Reserve, it is the central bank of the United States. The main priorities of the Federal Reserve is maintaining price stability while seeking maximum employment. I think we all know what maximum employment means, but what about price stability? Well, that refers to the cost of living for the average American household as well as the individual consumer. And the Consumer Price Index, or CPI, is the key inflation metric to monitor when the Fed talks about price stability. Another key takeaway to note that the Fed is by far the most important and the most influential central bank in the world. Thus, whenever they adjust or make changes to their outlook and actions on monetary policy, it has profound impact and consequences to the global financial system as well as the global economy. We all know that the Fed was the first major central bank to hike interest rates in 2022, and it was also by far the most aggressive, leading to a rapid rise in interest rates not only in the US, but in most other countries around the world. The primary reason for hiking so aggressively was inflation rising above the Fed's target of 2%, putting price stability for Americans into jeopardy. Thus, beginning in March of 2022, they embarked on the most aggressive hiking cycle in all of American history. Fast forward to today, where we're in the fourth quarter of 2023, we have seen inflation ease steadily for most parts of this year. Both headline and core CPI readings are edging down closer to the Fed's 2% target. With inflation receding quite steadily, the Fed has taken a pretty dovish stance at their recent FOMC meeting on the 13th of December. For those who may have missed out on the outcome of this meeting, here's a quick recap. They kept the Fed funds rate on hold at 5.25% to 5.5% as widely expected. But the statement and Chairman Jerome Powell's press conference were both pretty dovish by recent standards. The Fed appears to have taken the position that although inflation has not returned to its 2% target, it seemed confident enough to communicate 3 rate cuts for 2024. This outlook caused a huge sell-off in the US dollar, as well as causing US Treasury yields to plunge from short to long-dated government bonds. Now, was this the right moment for them to turn dovish? No one knows for sure, and only time will tell if the Fed took appropriate action on the 13th of December. Anyways, that's all from me for today's podcast on why did the Federal Reserve turn dovish. Do remember to subscribe to our podcast here at IronFX, where we're dedicated to bringing you the very best education to take your trading to the next level. Until then, stay safe and trade safe.